So once the trend line has more than one touch, it makes it more valid. Most time, once trend line price touches the trend line like 3 times, possibly the fourth time or the third time can break out. But price can do its own thing by respecting the trend line for a long time. So yours is just to be inquisitive and follow the trend. Now, here's price respecting the trend. In our previous class, I said when price following the trend and break out, it means we have a change of character. That is price. Let's assume price break this trend line, right? And never break structure to the downward side. It's called liquidity sweep. Now, if price break the trend line and retrace back, now what you are seeing just like this is seen like a retrace and price break structure to the downward side. So people who trade trend line, most likely, most of them don't take notes, and some those, if you know it and you take notes, is a plus for you. So what you have here is a change of character, right? And this is a break of structure to the trend to the downward side. Now, those who trade trend line breakout and retest is this is what they do. Low, the previous low becomes the order block, right? Then once price breakout, there's a book I sent in Caleb community. I will still forward it to you. The low becomes beyond the order block. That is why you hear people say breakout and retest. That is support. This support becomes resistance. That is price breaking out from the trend line. Normally using in the smart money way or the ICT way, you can say this is a change of character and a break of structure. So your expectation is to set something like a limit order at this order block. As price is retesting, your how will I call it? Your stop loss will be above the order block just a bit based on your risk appetite or equity. Then you target first your 1:3. So this is it. Hope you understand now.
Yes.
Right. Can we proceed?
Yeah, okay.
Right. We'll talk more about it on the entry model. It's not something difficult or complicated. Just know that once you have a change of character, price breaking your trend line, be expecting a retest. You can take advantage and take the retest. So now, today, we're going to be talking about order block, right? Now, we're going to be talking about order block. Now, if I may ask you a question, what is order block?
It's like the last buy or sell candle.
Okay,
In a discount or premium zone where you want to take your trade.
all right. So now, order block, I'm going this. So from what you've just said, it's very, very correct. It's very, very correct based on the type of trader you are. Um, Order block, just like the name implies, so we shouldn't make it complicated. It's not just the buy or sell candle that led to the change. Sorry, I'm coming. Let me check something. So order block is not just the buy or sell candle that led to the break of structure. Just like the name implies, very simple. Order block is where the smart money guys, the rich guys, the great guys in forex place their order, right? And our goal as a retail trader is to see the market the way they see the market. and take advantage of their entry opportunity, take advantage of their orders, then we decide to buy or sell. Now, order block, we have different um, trading traders out there. Some trade SMC, some trade the smart money, the ICT. Now, when we talk about order block, come on to hack out something in the chart. Let's assume you have price going up. Price breaking structure to the downward side. Now, this is price breaking structure to the upward direction. We have a break of structure. 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 Like I said, ideally, this is how markets move. But if we have to say it other way around, we'll just be marking higher high and lower low, higher high and lower low. But this is how markets move. Price doesn't move continuously without sweeping liquidity. That's why you see me marking out something like this as a sweep of liquidity. So now, your order block can be this. Those who trade the smart money using the demand and supply concept, here could be their order block. Then, and those who trade the Malaysian SNR, trading the QML strategy or liquidity sweep, this could be their order block. Then they will expect price to do what? Come down, sweep this liquidity, then they buy up from here. And the smart guys, their order block could be here. And using the Quasimodo entry model, order block could be here. So both of them are correct. Now, depending on where you want to take your trade from. Now, let's now go to our charts. So this was our chart we marked up previously. So we are going to be identifying order block in the market. And okay, let me talk about imbalance. Just a recap on the order block. Order block is beyond, is not just the buy or sell candle that led to the break of structure. We have order and we have block. Now, order this is where the smart guys, the big guys in the market place orders or see where it is trader place order or where orders are placed. Now, for that particular order to be placed, now they've seen certain reaction of price. They've seen that, oh, there's liquidity that has been grabbed, that they've seen liquidity that will be taken away, and they discover that, oh, they are no longer going to become the liquidity. That is when they now settle that, oh, this particular block is where we place our order. They discover that this liquidity will be taken out, this inducement liquidity will be taken out, and liquidity has been swept. So it means there's no available liquidity and liquidity has been swept below. It means there's no available liquidity to be taken out. So they now found that, how will I put it? They now settle that, oh, this is a place we can place our order. And they now look for a block where they can place their order. That is why it is called order block. You can't just wake up and say, oh, my order block should be here, should be here. Mm-mm. There are certain things they look at. That is, liquidity has been swept. It means they are no longer going to become the liquidity. It means liquidity will be swept, and as price was coming down, liquidity was taken also. I'm sorry, my network went off. I'm back.
Okay.
Hope you understand my explanation about order block.
Yes, sir.
All right. So now, like I said, today we'll be talking about order block lesson 2, 3, and 4. Right. So all these concepts are not difficult. Just like I'm taking everything one after the other. Once you step on your chart, these are things you look at one after the other. So the lessons are just like your checklist. These are things you look at when you are in the market. It's like everything I drew disappeared. Okay. See how it let me bring it back. So now this was the last explanation. Now, order block and imbalance or inefficiency goes together. Order block, imbalance, and inefficiency goes together. So now, what is inefficiency? Inefficiency is seen as, I've talked about, hope you're understanding the way I teach.
Yes, sir. I'm getting it.
I don't say you are listening. I hope you understand the way I teach.
Yes, I can't.
All right. Now, we're talking about order block. Now going to talk about inefficiency. I'm sorry, please. I want to bring somebody in. Hello, are you with me?
Yes, coach.
Sorry, I want to bring somebody in.
Okay.
So, like I said, order block, I said I'm taking everything step by step. Once you understand market structure, because once you open your chart, the first thing is, oh, where's the price going to? Where is the price going today? Where is the direction of the market? So once you are able to identify the direction, either bearish or bullish, then the next thing is to identify if the price is in consolidation phase, uptrend or downtrend. So, but advise don't trade a ranging market. So once you are done with that, the next thing is you mark out your structure. That is your break of structure. You mark them out. This is what I do. Just give me more clarity when I see the chart. And you identified other blocks. Now, we've not started marking other blocks on the chart. We've not started marking other blocks on the chart. Then we identify inefficiency. Now, for you to identify a valid order block, you must understand inefficiency. Now, let's talk about inefficiency. Inefficiency is seen as imbalance. You can call it imbalance. You can call it fair value gap, and you can call it internal range liquidity. I'm coming. Let me type it out so that whenever you are making reference to the video, other blocks. And the BOS here means break of structure. It's like this thing is very long.
Yeah.
Now, there's this jar I want to put. So now, let me increase this to 24. Now, other block. Oh, there's repetition here. Just keep it simple, right? Is where the retail traders slash this smart guys, which is where the retail traders, that is the smart guys, seeks to place their trade. I come again. Once you understand, I don't want you to be confused. I don't want to go back again. that, oh, I don't remember these things because I will refer you back. Now, once you are able to understand market structure, you already know, like when you wake up in the morning and you open your chart, right? You wake up in the morning and you open your chart, you are able to identify the direction of the market, if it is up or down. Now, please don't trade a ranging market. Wait patiently. In fact, patience um takes like 80% in the game. So now, once you are able to like identify the trend of the market, is it bearish or bullish? Is it in a continuation phase, in a pullback phase? Once you're able to identify that, then the next thing you need to do is to mark up your chart, the break of structure, where you have a change of character, you mark it. And the next thing in line you need to take note is the order block. Order block. Now, what is order block? Order block is where the retail traders or the smart guys stick to place order. Just like the name implies, we have two words here. We have order and block, right? We have order and block. Order is where retail trader or the smart traders seek to place their order. Now, when I talk about the smart guy, these are big guys in the forex industry. The banks, financial institution, the government agency, this is where they look forward in placing their trades. Now, can be seen as buy or sell candle that led to the break of structure, right? Now, I was making an illustration recently. Now, this is in an upward trend. We have break of structure, and here's another, right? Now, that
Mm.
particular buy or sell candle that you are seeing in this particular area, we still go to the chart. This is just an explanation. It's an order block because this particular candle led to the break of structure. Here, we have another block here that led to the break of structure. Now, it's not all the other blocks that are valid. Not every other block is valid. Now, what makes your other block valid? I now said it is more valid. It is more valid when liquidity has been swept, right? Just like this one swept liquidity. And when price was coming down, right, it discovered that liquidity was also taken out. Now, this liquidity is seen as inducement liquidity. We'll talk about that later. Now, it is more valid when liquidity has been taken out or swept or liquidity has been grabbed, either grabbed below or grab as price is coming. And also it must has volume or FVG. Now, what is volume? That will now take us to inefficiency. The next lesson in line. The next lesson in line. Now, what is inefficiency? Now, inefficiency, let me type it so that I will now explain. Inefficiency can be called FVG. FVG means fair value gap. You can call it gap. You can call it just gap. You can call it imbalance. You can call it I IRL. It's still the same thing as internal range liquidity. What name can we give it again? We can call it volume. So we are good. So let me break it down. Inefficiency can be called a fair value gap. We are running out of time. I'll still drop a link after this. Come, let me do something. Let me remove this watermark. It's distracting me. Good. So now we talk about order block. We talk about inefficiency. And I said inefficiency. Let me increase this to 28. I hope we are following. You see, I'm not rushing, like I'm taking my time. The theoretical aspect, then we now go to the chart. So inefficiency can be called fair value gap, FVG. It can be called gap. It can be called imbalance. It can be called internal range liquidity, and you can also call it volume. Now, how do we now define inefficiency? Or let me say, an inefficiency, or let me use IFC. IFC occurs when there is differences between the demand and supply. That is, the buyer and the seller. So let me explain again. Inefficiency can be called fair value gap. It can be called imbalance. It can be called internal range liquidity. It can be called volume. Anyhow you want to call it, just know what is inefficiency. And how do you now define inefficiency? Now, inefficiency or occur when there's differences between the demand and the supply. Then we now have volume. When there's differences between or when there's differences between the buyer and the seller, we have volume. We have that gap. Now, let me now do an illustration. Here's a candlestick. Here's another candlestick. And here's another candlestick. So let me put the wick. This particular candlestick is a wick, and this also has a wick. You now discover that there's a gap here. So this is now called if inefficiency. The reason why I'm taking this topic one after the other is how the price move. All the curriculum, the course outline I dropped, this is how the price move. Price move from with structure, breaking structure to the upward side, and as price keep moving, price creates imbalance, creates order block, and this inefficiency. Anytime you have inefficiency or you have the fair value gap, you have volume. What you can call this volume or you can call it FVG, but let me use it. This is the most popular word, FVG. So whenever you have FVG, price must surely, let's assume price is going up. Let me put a candlestick here, a candle here. Sorry.
Right.
No. Here's my explanation. Now, let's assume price is going up. For price to continue its journey, price must You know, price is just like a vehicle moving from Enugu to Abuja. At every point, the motor need fuel. The motor must branch to a fuel station. Not just the motor, even the passenger inside the motor will need food. Is either the motor branch to take fuel or the driver drives the motor. We need to branch in a restaurant so that people will need to eat food, because when you travel on a journey, you discover that you'll be hungry. Driver, please park. I want to eat. I want to buy plantain. I want to buy okpa. I want to buy this. I want to buy that. So this is how price move. Just take price movement like a motor that is going to a journey that need fuel. Even the driver that is driving the motor need to eat food. So now order block inefficiency moves together. And now look at this order block here. I said order block is where retail trader, smart guy, seek to place order. It can be seen as buy or sell candle that led to the break of structure. And now, and now went further to say it is more valid when its liquidity has been swept, or let me use the word grabbed, or let me just leave it like that. I hope you understand. Liquidity has been
Yeah.
swept and has volume. And what is this volume? Is this inefficiency that we just talked about, which is this, or FVG. And I said inefficiency can be called fair value gap, imbalance, IRL, or internal range liquidity. Now, this inefficiency, I just give different name here, occurs when there's differences between the buyer and the seller. That means anytime you see price going up like this, price need to come down. I'm coming. Let me now. I now said inefficiency, order block is valid when it has inefficiency. And me, the most valid order block is the one that creates inefficiency, not just the buy or sell candle. So here's my order block here. As price is going up, let's assume price is going up. Price will need to fill this gap. Note, price must fill this gap. And filling that gap, this is liquidity. This fair value gap is internal range liquidity. If you remember, I call it IRL, internal range liquidity. Is also a liquidity. So price need to fill this gap before continuing journey. So in summary, a valid order block is the one that creates an inefficiency. Write it somewhere. A valid order block is the one that creates an inefficiency. So let's go. Favor, do you have a question? Favor, are we together?
Yeah.
It's like you are not here.
Yeah.
I say, hope you understand my explanation so far.
No.
You have not been in the class. And I'm very, very sure you're not in the class. Right?
This class,
Yeah.
I came late. If I could join, you people have started already.
Where I started from, I still went back to like explain myself from the beginning. Maybe when you rewatch the video, you understand. So we have less than 1 minute. So if you have any question, let's use this minute to ask question before I drop another link.